Hello and welcome to another update video about LINK. LINK continues to be in this pattern, but reacted now to our micro support area that I communicated a few days ago, which is good to see. And it also reacted exactly where we actually needed it to react. So I'm going to talk about that. Overall, the pattern has not changed at all. No support level is broken. The idea is still that we have a good chance to fill in a 5-wave pattern to $21 and more. It just takes a long time, which is, however, exactly what I mentioned already in November. You may remember it if you watched our videos back then, that this wave 4 was supposed to take around about 2 months because the wave 2 took 2 months. And often in crypto, they have the same length and duration. And that's exactly what happened. Now the question is is this wave 4 over? At least the market tries to. The market is trying to bottom. So far, not very successfully. And we talk about why the move up at least is weak. But I think I think LINK is holding quite well compared to, considering what the market did recently, which was obviously the sell-off, and during some days of the Bitcoin sell-off, sorry, I just recorded a Matic video. LINK did actually perform quite well. So, but just visually, the market is still in this ongoing range, and the range it's not broken. So we're still in this choppy sideways action, but we apply the wave labels to understand if there's a chance for this 5th wave to start already. I think so. Please be aware that obviously LINK was in this very, very long-term range, which started in May 22, ended in October last year. And LINK likes to do these sideways movements. But hopefully it's not going to be another year. It shouldn't really be. So I think we should be either we make one more marginally lower low here, or the low is already in this wave 4. That's my assumption. Obviously, would have to change my view below $9.75. So if there is a break below that 50% Fibonacci retracement there, then we're likely going to fall back into this forever range down here. And this would be extremely, dangerous, I think, from a bullish point of view, because the market would basically, fall back into this range, and it would not have bullish implications, I can tell you that. It would rather be bearish. So whatever happens, the market should hold the $9.75 level. That's the 50% retracement level of the 3rd wave rally, which topped in November. And that's a typical support, maximum support, I should say, for this 4th wave. The 38.2 Fibonacci is the ideal target, you could say, for a 4th wave, as I always mention. The 23.6 is the minimum I would like to see normally. The price reacted to that level twice. But because the movement is a sideways correction, it's sometimes the case that, we don't see a very deep correction price-wise. Prices can correct over time or by just a counter trend move. In this case, mostly over time, I would say. It was just sideways. We're basically at the same price now that we were at in November. So as you can see, the target to the upside for one more high is around $21 plus. So that's where the ideal target range starts. There is resistance at $18.30. Now, a lot of you will be interested in the microstructure. Be aware that microstructures, they are very fragile. They change often due to the intraday volatility. But at the moment, I carefully assume, very cautious about it, that in January here, the 4th wave bottomed, that the 5th wave started. It's not high confidence. The pattern has some problems here. It's not very strong. It's a 3-wave move to the upside only. That could literally be anything. We don't get a strong edge here because we don't have the 5-wave move that we need to confirm that something more bullish is going on. We only have 3 waves. Because we only have 3, we call that a potential wave 1 in an ending diagonal. That's maybe a little bit of wishful thinking, so it's not high confidence. I wouldn't be surprised at this stage if support breaks. Then we have an expanded flat pattern, 3 waves in A, 3 waves in B, 5 waves in C. In a 1-2 structure, that wave 2 might have bottomed here a few days ago, and the support area that I communicated is here between $13.14 and $14.03. It already reacted to that micro support area as well. It could be in this move up now, but it's too small to be reliable. Minimally, I would like to see a break above $14.43 now, $14.44. This previous swing high. That could also be an inverse head and shoulders pattern that's forming here. To suggest further that we're moving up, but it's too small, okay? obviously that last swing low needs to be holding. We had a bullish divergence on the MACD and on the RSI. So all of that, I mean, it could be really, yeah, lower low on the price chart, higher low on the RSI, MACD as well. Could be that the low is in. It's got everything, the chart is set up for that. The bulls just need to turn up. But the problem is the context, which means that this is an ABC. So it's not, if this was a 5-wave move, an impulse, I'd be more confident. Can't be at the moment. But just use the $13.14 level. If that level breaks, we're likely going to fall back into this larger degree 4th wave. That's my update about Matic. No, not Matic. Sorry, I'm still in the Matic. In the Matic brain. No, that's my update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.